Hi there, I want to share a stock analysis update on Domino's Pizza, which is one of the companies that we covered in our analyst program as part of the investment case. Domino's Pizza reported earnings and the stock gapped up significantly, so we opened up our model, we looked at our recommendation, our price target, and changed our investment thesis after they reported earnings. So I want to share that process so that you can see how we focused on the company's earnings and then anticipated the stock move. So here's the video. All right, folks, and welcome to the update of our Domino's Pizza investment case. As you recall, during the investment case, we said that we were going to pay close attention to the company's earnings report or earnings release. And today they've actually came out with fourth quarter and full year numbers. As you can see here on my screen, you can notice that they reported the numbers, and you can read the results a little bit more carefully. And let me just erase this. And the numbers were actually better than expected. They had a great blowout quarter and fiscal year 2019 numbers. I mean, look here. Global retail sales growth, 7.6% for the quarter and 8% for the year. This is higher than what I was anticipating. US same-store sales growth of 3.4%. And then for the whole year, 3.2%. International same-store stores, 1.7 for the quarter and 1.9 for the whole year. Global net store growth of 492 for the quarter, and for the whole year, 1,106. I mean, blowout quarters, blowout numbers across the board. So here's what you would do at this point. At this point, you will open up the model and you would make adjustments and modify your numbers or update your numbers to reflect the performance of the year and also for what the company is providing in terms of guidance and outlook. If I zoom in a little bit more, and if you scroll further down on the press release, you can see here 2 to 3 year outlook. They're expecting global retail sales growth 7 to 10%. You could probably model that into your assumptions. US same-store sales between two. I mean, this is a very wide range. International same-store sales, unit growth 6 to 8%. So we can actually pull up our model and make all of those necessary adjustments here. You could go to your store buildup and you can modify your same-store growth numbers, increase the units of stores that they're adding and opening at the domestically in the States and also internationally. And this will definitely reflect what the company's anticipating. Now, when we look back at our DCF analysis, remember, I was aiming for a street case of $243 a share. Obviously, with today's number being better than expected, the stock performed a lot better. So let's pull up the stock chart. Here it is. And the stock basically just took off based on those earnings. So we got it wrong. But what were the clues that the price action was giving us before they announced earnings? If you recall, when I said, look at technical analysis, during this decline, let me adjust this back right here. During this decline right here, and let me highlight this area, this was the point or the period in time when we were doing our analysis and coming up with our street case and then issuing a $243 price target. You also heard me talk about the coronavirus as perhaps being a catalyst that would impact the company negatively. Obviously, it didn't see that, but we will have to listen to the earnings call to see if management has any input or insight into how that might impact their system-wide sales. I've also mentioned that if the stock reverses and goes back to your resistance point, which it did, leading up to earnings, then I said you have to pause and re-examine your assumptions and reevaluate if your investment thesis is correct, because there are chances that we can be wrong. And obviously, the quarterly earnings report reflect that. So now is the time to change your perspective, or for me to change my perspective and say, what piece of information did we not include in our analysis? Then update our model and reflect a new price target. And the price target that I believe the stock is going to be reaching will be the bullish case, $411. And of course, this bullish case might change by coming to my assumptions and making sure that earnings per share increase to reflect management insights and guidance. But let's go back to the football field. So this bullish case of 411 is game on. This is where the stock now wants to go. We have the volume right here. We have institutional investors buying up millions of shares, okay? So in terms of technical analysis, how do I see it played out? I think the stock may probably pull back a little bit and then continue higher to a price target of perhaps 400 or 411. 400 will be the centering mark. So this is how you play the market. This is the game that we play. If we get it wrong with earnings, when the company comes out, then we have to reevaluate where did we went wrong, then look at our bullish case, and now have a new price target. So the new price target now would be $411, and that's just the game that we're playing. You're not always gonna get it right. Don't try to beat yourself or be upset because in a lot of cases, you cannot anticipate or predict these things. Sometimes we get it right and sometimes we get it wrong. That's the game that we're playing. And if you're batting in the market, 5 out of 10, that's 50% winning rate, you could still make a lot of money. You could still be very successful, okay? So we got it wrong. There's nothing wrong with that. We just have to reevaluate and keep moving forward now, update our price target. And this happens all the time across the board. Remember those analysts that we looked at? Boy, they were even, they even had, some of them even had worse price target than us. One had a price target of 208, the other one 250, Barclays, Deutsche Bank. RBC definitely got it right, 337. So kudos to them. But this is the game that we're playing. All right, so I hope this short, brief video is insightful and you got to learn a little bit more about how we adjust and update our model when companies report earnings. And again, not to beat yourself about it when you get it wrong, it's just about reevaluating and setting your new price target for the upcoming quarter or the upcoming 6 months. So now that you've seen the video and the analysis, here how the stock has actually performed. So recall that I talked about technical analysis, experiencing a pullback on the stock, which we actually experienced. Here it is. And of course, this was all due because of the coronavirus, but also profit taking on investors that were owning Domino's Pizza. And notice here that it came to resistance, which now becomes support. This is more on the technical analysis part. And the stock basically found its footing and continued to rally to the upside, along with the major averages rallying after the major market sell-off. So what did we learn here? Number one, we looked at the situation overview of the company as part of our process. Number two, we went back and paid attention to our model, we revised it and came up with a new price target. And lastly, our investment thesis was changed. We elevated the price target to 411, but also we applied technical analysis, and here's the outcome. So I hope you pay close attention to the process in anticipating these moves, applying fundamentals, modeling, and earnings so that it can make you a better investor and increase your skill set and apply it at home, whether you're looking to apply as an analyst, for an intern, especially if you're a college student. But if you're a professional, hopefully this gives you a different perspective. So with that being said, folks, I hope you find value in this, and I'll see you in the next one. Take care. Bye-bye.